Welcome to the Off Street podcast featuring Adam Reiner and Sean Dan. Off Street contains general information that is not suitable for everyone and contains certain forward-looking statements of future possibilities that, due to known and unknown risks and other uncertainties and factors, may differ materially from actual results. As such, there is no guarantee that any views and opinions expressed herein will come to pass. Off Street is presented for informational purposes, and nothing contained herein should be construed as a solicitation to buy or sell any security or as an offer to provide investment, tax, or legal advice. Additionally, this communication contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to their accuracy or completeness. Adam and Sean are employees of Marshall Financial Group, Inc., a registered investment advisor. For additional information about the firm, including its services and fees, send for the firm's disclosure brochure or visit advisorinfo.sec.gov.
It is Tuesday, June 6th, 3:30 p.m. Can you believe it's June already?
I cannot believe it. We are deep into summer.
Deep in the summer.
It feels like it. I mean, feels like it hasn't rained here in 6 weeks. It's been every morning I wake up, it's sunny, 70, 75 degrees. Great.
Yeah, the temperature is great. I became a real suburban dad last night.
How's that?
I was out there running the sprinklers.
Oh, wow. That's a big step.
Grass is browning up.
Have you sensed, as you become, I guess, more tenured as a father, that you worry more about your lawn and your garden and all that?
Certainly the lawn, yeah.
Okay.
The grass is browning. The kids were running all over it last night. If I didn't take any action, it would just eventually wilt away.
All right,
and we'd be left with dirt.
That's fair. Taking matters into your own hands.
There we go.
That's a big time dad move, though. I like it. Do you put on some white New Balances and?
Not yet. Not quite there yet.
All right, it'll come
Eventually.
I did, though, this weekend. I saw something online that made me feel a little bit more comfortable about what our leaders think about the state of our nation's monetary policy.
Oh, yeah? What's that?
I guess I'm guessing no, because you're not a music guy. So I'm just going to guess no. You've never been to a Grateful Dead concert. But are you familiar with the Grateful Dead and their music and their whole vibe?
I am familiar with the Grateful Dead, and you are correct. I've never been to one of them.
Yeah, I would have put $1 million on that. But I would say it doesn't seem like a place. A Grateful Dead concert does not seem like a place for people who are worried or stressed or concerned.
Chill vibes at those concerts.
Chill vibes to the 100th degree. A picture surfaced on Twitter this weekend. It's a little blurry, so we can't be sure. But the guy who took the picture claims that Jay Powell, head of the Fed, was at a Dead & Co. concert in Virginia this weekend.
I think that good pause indicator for next week.
In my mind, Jay Powell, if he's not in front of a microphone at a press conference at all times, is a mahogany library studying policy from 1700s. But the fact that he was at a Grateful Dead concert, he still was in business casual dress in the picture. But I don't know. Doesn't seem like he's too concerned.
Picture did have a bit of that Bigfoot vibe, though.
Yeah. You can convince yourself it's Jay. So yeah, we don't want to say with 100% certainty, but the guy who posted it, I think his name was Jake Sherman. Is that right? He had his own publication. He listed MSNBC and NBC News in his bio. 350,000+ followers. Seems reputable enough. Can't confirm it 100%, but
plus, if it was Jay who was photographed or his doppelganger, they were wearing a button-down shirt, which feels like something he would do at a Grateful Dead concert.
Yes, absolutely.
He did have a hat on, though.
Yes, I would assume Jay at that concert 50 years ago might look a little different than Jay today, but I digress.
Hey, so this is a big milestone for the podcast, Sean. Episode 9.
Episode 9?
Episode 9. And it is the first time we are recording in the same space.
Yes.
Instead of two separate offices.
It was a labor of love to set this up today. I'll leave it at that. But I do like it off the bat. I like this better than how we had it.
So here we are.
Feels more engaging.
Who knows? We'll have it in episode 10.
Just going to get bigger and better every episode.
So we have an update on the debt ceiling.
I hope the update is just we don't have to talk about it ever again.
That is the update. This is the final debt ceiling update. It's passed. It's done. It will not have a financial market impact for 2 years now.
Yeah, I shouldn't say ever again. I should say at least 2 years. We don't have to talk about it. But as we've been, I guess, hoping for most of this time, got past the finish line. Doesn't seem like there was much of substance, I guess, that really shook the economy that came of it. Maybe do we pat the market on the back for freaking out? We saw we were like, okay, we've been through this in 2011. We know what to do now.
I think the market remained incredibly calm during the whole thing. So, but I think it's time to move on.
Yeah. Yeah. I looked it up. The term debt limit on Google Trends started to rise in mid-April. But over that time period, since mid-April, NASDAQ and S&P, both positive, a lot less chop than we saw in 2011. So market took it in stride,
I think
as we hoped.
the most move or the biggest move that we saw from the whole thing was in the short end treasury market
Yeah.
when the yields went up, and then some credit default swaps that those widened out a bit. But as soon as there was an agreement, both came back in.
Yeah. It's hard to say. Do you have a sense of if that felt more speculative? Like, let's just take a long shot here and get a big payout if we actually default, more than hedging?
Maybe it was a combination of the two.
Probably, it's impossible to say really with 100% certainty, but
I could see it either way.
no big freak out. So, like you said, can put it to bed, revisit it 2025 roughly.
2025. Hope not, though. So, two popular shows just had their finales: Succession and Ted Lasso. Have you watched them?
I saw Succession. I have plans to watch the last 2 episodes of Ted Lasso tonight. So
no,
hate to be that guy
no,
who hasn't.
No spoilers.
No spoilers. Hate to be the guy who hasn't watched it yet, but has seen Succession. I'd say pleased. Give it an 8 out of 10. How it finished. The show overall, 10 out of 10. Loved it. But what were your thoughts?
Without spoilers on Succession, felt like the finale could have been a little shorter, or the time could have been better spent during that hour-and-a-half finale.
Yeah. It was such a good show. They set themselves up for impossible expectations for a finale. So try to remember they did the best they could. But yeah, overall great show.
I think Ted Lasso, without spoiling anything for you tonight, I think the show ended the way it had to.
Okay.
Stayed on brand, I felt like, in the finale.
Okay. All right.
So if the markets had writers, they'd be doing a good job keeping everyone guessing how the year's going to end.
Yes, still a lot of divisiveness. Despite kind of this market rally, it seems like people still want to skew bearish, or at least say, hold on here. Let's not get too excited.
It does seem like every week or every month, there's data points that come out that could support one argument or the other. One day, it seems like we get data points that would support a bearish pause, I guess. If the economy's weakening, Fed would have to pause. And then it seems like the same week, we can get another data point that comes out that supports maybe the Fed has to do more. I think last week is a great example of that. There was JOLTS data by the middle of last week. Don't remember exactly what day. So JOLTS is job openings and the labor turnover. It's a survey by the Bureau of Labor Statistics, and that came in slightly hotter than expected. So there were more listings, job postings.
Unfilled, yeah. There's roughly 10 million unfilled jobs.
Again, that's just the survey. Then the next day, there was IMS data that came out. That's Institutes for Supply Management, and this was focused on the manufacturing sector. That came in slightly below consensus. And there was a downside miss on the prices paid component, which could be a good story for inflation. So maybe Fed does less. And then on Friday, there was more labor data that came out that was kind of a mixed bag. It showed, on one hand, it showed more jobs were created than markets expected. And then on the other, the unemployment rate went up and wage pressure kind of stayed in check. So I know we were messaging about it on Friday after it came out, and you asked for an initial reaction, and it felt a bit Goldilocks-ish. Fed was meeting its mandate. There was still full employment, but wage pressure was moderating. And to a certain extent, maybe the market interpreted Friday was a good day for equities.
Yeah, I think the market liked what they saw. There's a great article in Bloomberg. It was posted either early this week or late last week by John Authors. And he said how everyone, especially these days, you kind of talked about how everyone wants to put a narrative on the market, either positive or super negative. And he said, again, the Goldilocks comparison, maybe it's a mixed bag and maybe it's just a nice mixture. We don't have to say the market's great, the economy's great or terrible. And I would say I pretty much agree with that. You just listed all those things where some good, some bad, nothing catastrophic or super out of line. And I don't think there's a need to push a narrative on one side or the other, at least right now.
But it's kind of funny. It feels like that's the way it's been this whole year, is one data point comes out hot, one comes out cool, and we just keep going through this dance every month of maybe Fed has to do more, maybe Fed can pause.
I think last year the narrative story was a lot easier. Inflation dominated every single day. It only went in one direction, at least for the first half of the year. It was easy just to say things are bad right now. Inflation's high. We need to raise rates. And that was the story. And we clung to it, and the market acted like you'd expect. The market went down. This year, as those things start to like normalize or turn over, it gets harder to assign just a blanket narrative to it. And I think people are maybe thirsty to keep applying that narrative. The consensus is at some point we're going to hit a recession. Yet at the same time, the job market's holding up, volatility is down in the stock market, inflation's coming down. Bloomberg's prediction, their nowcast prediction for GDP for Q2 just turned positive. Yes, you can point to some things and say it looks recessionary, but on the whole, nothing is glaring, bright red flashing lights bad yet.
And see, to that point, it's really hard for the market to come up with a neat narrative when even within the same data point, you can get two different stories. Like that jobs number that came out on Friday. There's two components of it. There's a household survey and establishment survey, which is a business survey. And they both kind of told different things. The household survey showed job losers, while the establishment survey showed job additions. So part of it could just be response rates. Maybe they're not great. I know with that JOLTS data that came out earlier last week, the response rate was only 31%. If you look at the response rate back in 2018, it was around 64, 65%. Part of me can't help but wonder, isn't there a better way to capture this data at this point than sending out surveys?
Especially when those are the things that people cling to so hard. Like we would move on JOLTS data last year. I remember days when JOLTS would come out hot.
They're highly watched indicators.
Yeah. And the fact that it's a low response rate and then we create an estimate based off of that response rate, it feels there's got to be some level of statistical bias in there. And at the same time, too, to point out, for the people who like to point out these things that have turned negative, we were looking for normalization last year. It feels like we're starting to get normalization. Like the things that have turned negative, nothing's really fallen off a cliff per se.
I think that's important. We talked about that a lot last year, that eventually the economy was going to have to normalize, that it swung so far one way during COVID and coming out of the pandemic, it swung so far the other way. It went from like the economy essentially shut down in March 2020 to 21, where rates were low, vaccine came out, mandates started to get lifted, and there was just a flood of spending. And then when we got the inflation boom, money was cheap.
There's really been nothing like this. I know the worst thing you can say, and you shouldn't use it lightly, is could this time be different? This time may be different. But if there ever was a time where we can't just blindly rely on, okay, this indicator has turned negative, check the box for a recession, maybe it's this time.
And I remember while we were talking, even last year, beginning of this year, we would say if growth slows because things are normalizing, it may feel like a recession, but it may not actually be one. It could be that's what we're seeing now.
Anytime you come from that euphoria, anything slightly less feels terrible. You can't neglect the base rate there either, like what we're coming from.
I know you had mentioned the Bloomberg Nowcast data. They also have this economic surprise index, which captures the degree which economists overestimate economic trends. And right now, so far this year, we're pretty much near the high on positive economic surprises, which you wouldn't have really expected coming into the year. So just again shows maybe there was a negative bias built into the market, and the economy really hasn't fallen off the way that was anticipated. So there's a Fed meeting next week on the 14th. We get some inflation data next week on the 13th. So that'll be the last big number that the Fed gets before they make their rate decision. Right now, it seems like people expect a pause or a skip.
A skip, yeah.
Next week, I like that term. Gives themselves some optionality about what to do going forward. But even looking at it, whether they skip or pause, you could ask the question, why should they continue to hike, right? If the Fed has their mandate of full employment, stable prices, moderate rates, and you just start checking the boxes, we're near max employment at 3.7% unemployment rate. It came out Friday. Rates are moderate, especially compared to pre-COVID. And that just leaves the stable prices piece of it, where inflation peaked last June. It continues to come down. I think next week, the estimate for the year over year CPI number for inflation is 4.1%. Last month, it was 4.8%, 4.9%, 4.9, I think, right?
We're at 4.9 right now.
4.9, yeah. So it will continue to slow. And why continue hiking into that if you know policy works on a lag?
Well, that's the thing. They kept using, we need to hike because things move on a long and variable lags. So we need to keep hiking, because it's going to be a little while until we feel the impact. Now I think you can use the flip side of, okay, we're starting to get into that uncharted territory. We're getting up near 5-6%, not uncharted, but at least in this like zero interest rate policy.
Post 2008.
Post 2008, uncharted. Post like zero interest rate policy environment, uncharted territory. Why not now? Let's pause and see what happens. Because again, if it works on long and variable lags, if we've only felt 1%, maybe 1.5% of this hike so far, if we're up in the fives, why keep pushing it if you're starting to see positive signs? Maybe we just, like you said, pause or skip, which it sounds like they're going to do. So credit to them if they do that. But I definitely would say I'm starting to lean into that camp of let's just wait and see here.
To demonstrate how it works, the Fed policy, just think of March 2020. The Fed stepped in, was very aggressive in providing accommodative policy, took rates down to zero, flooded the system with liquidity. And it took 27 months from March 2020 to the June 2022 peak of CPI at 9.1%. They started raising rates on March 2022. So it's only been 14 months since this tightening cycle started. And we've seen CPI go from 9.1% to 4.9, maybe 4.1 next week if economists are right. So it feels more like the Fed needs to use more of a chisel than a sledgehammer.
No, I 100% agree. And that's a great point. All that money that was injected in March took that long for us to hit the peak, started hiking. And I'd say that's a pretty big correction in CPI since the start of that hiking to now, or I guess since CPI peaked to now. So yeah, definitely in the camp of let's wait and see here. There's no need to keep, like you said, using a sledgehammer.
I know with inflation, there's been all kinds of terms that have come out the past year, or at least terms that have become more popular, like shrinkflation was one of them. We could probably say sneakflation is part of that.
Sneakflation.
So let's talk about tipping for a little bit.
Okay, yeah. The what do you call those, POS systems?
Yeah, like the Clovers and the Squares and all that. Yeah. So I've noticed it. You've noticed it. I'm sure everyone else has, or most people have as well. You're often prompted to provide tips now, maybe at places that you weren't before, like self-checkout, for example. And to a certain extent, it feels like tipping culture has changed. I think a lot of people have noticed that. They're not sure what to tip at this point. I know you had that story about the Phillies game.
I was at a Phillies game, I guess 2 weeks ago now, and it was this little kiosk where you opened up a fridge and got your beer yourself and went on your way. And it asked for a prompted, do you want to give a 15 or 18% tip for this $16 or $22 domestic beer can
that you got yourself?
Yeah, that I opened the fridge and grabbed myself. And I was like, that feels a little out of hand. And then I was also at a concert a few weeks back, and I bought a T-shirt just from the merch stand. And I was handed the T-shirt by the person behind the stand. And even there's a tip prompt, which I had never seen before. It's like going to, I don't know, JCPenney and at the end they're like, do you want to give a tip? Tipping norm of, you just give 20% at a restaurant and that's all you really need to worry about. Feels like that's all out the window. Now you got to consider, what do I tip when I get myself a beer at a baseball game? We've definitely reset the bar here.
I think my strange tipping prompt would be self-checkout at an airport. I was prompted to tip.
Really?
Yes.
Who does that tip go to?
Someone. But CBS had an article, I think it was at the end of May, that tipping culture has changed. And they say historically tips were designed to reward and sometimes ensure good service, but business owners are increasingly comfortable asking for customers tips, which no doubt we've seen. I know there's a place that some of us in the office will go for lunch sometimes. It's really just like takeout. There's not a big sit down business, and then you're prompted for a tip, and say old rules are out. Old tipping norms are dead. There are no longer any hard and fast tipping rules. COVID-19 shattered the norms of tipping, which I think this was a good line in here. This is a quote from a professor of hospitality management at Johnson and Wales University. And he talked about during COVID, tipping was like a donation, and you recognized frontline service employees who were out doing difficult, dangerous work. And we all appreciated it. So we all contributed a little bit to that charity, which I think was fair. Like you didn't really necessarily mind being prompted for a tip then.
Yeah, especially if it's like if you're going to a small business like a restaurant in your town, they're still open doing takeout. I would feel good about giving that 20, maybe even more than 20% just for the takeout, because you're like, I'm helping this business that I love so much stay afloat. But I don't know. It doesn't feel like we're in those times anymore.
I agree with that. But the same professor says it's okay to start to revert to old tipping habits if you're like, and that it currently feels like extortion at times. This is a separate professor. This one's from Columbia. Who says you generally tip for two broad reasons: either to reward good service or encourage it in the future. But when you're doing a transaction that involves no human interaction, like buying a beer at a Phillies game or a self-service kiosk at an airport, the prompts feel inappropriate and it feels like extortion, which I agree. This other professor from Cornell says this has always been around on some level. It wasn't uncommon for businesses to have a tip jar that you just simply ignore and not put money in. But now when the tablet gets turned around, you have to actively hit no tip. So it feels like a sin of commission, and it makes you feel bad about it.
Yeah, I think that's the biggest thing now, and why people are, I guess, antsy about it, is because that you get put in those positions where it gets turned around to you. Maybe there's people behind you and it's like, oh, is this person going to give a tip? And you almost feel, even if it's not something you've ever tipped for before, you feel bad hitting that no tip. Like you're saying to the person's face, like, I don't want to give you, I don't think you deserve a tip.
Pressured. You don't want to be judged.
So there's a lot of pressure there.
So CNN and creditcards.com put together a tipping tool that you can run through. So you want to run through some of these?
Yes.
Let's start with waiters, sit down restaurants. Average tip
20%.
20%. Yeah,
20%.
That is what people
classic
said. Average. I thought this was an interesting one because it's probably something that came out of the pandemic. Delivered groceries would be a confusing tipping situation.
Delivered groceries. Say 10%. People do 10%.
10%.
Yeah.
Right on. They say 4 in 5 people that use these services tip most of the time. 10%.
Yeah.
Ride sharing, probably another one. This one surprised me a little
This
bit.
one's tough because I talk about this all the time with my friends of like, I know this one's a wide range. Some people think you got to do the 20%. I know some people that are like, it only became a part of the app, I feel like, a year or two ago. Like I used Uber for the longest time and tipping wasn't even a thing. I try and do, if it's under $10, I'll give kind of $2 no matter what it is. And then I try and give closer to 20% if it's a longer ride.
You know, it's one of those where to provide you a service and they're either dropping you off at your house or maybe getting you from your house. So create a weird scenario.
Yes, absolutely.
But they say the average respondent tips 10% for rideshare.
10%.
10%. But people 55 plus tip more, or say they always tipped, compared to those 18 to 34. So it was 61% of people 55 plus said they always tipped, while those 18 to 34 was 28%.
Interesting.
Yes,
Okay.
not what I expected.
Yeah, I would expect more tipping at this point. That's definitely a tough one, especially if you get like surge pricing, because it's like, especially if you're down in the city, a trip that sometimes can cost $8. If it's like, if you're leaving a sporting event or something, that can jump up to $50. And it's like, all right, if I'm already spending that much, do I then tip? How much do I tip on top of that? So that's an interesting one. That's one that I struggle with. I never know what to give there for Uber.
So I'll lump these next two into the same bucket: fast food, so fast casual, or pick up to go orders.
So I split I would say like a fast casual, like a Chick-fil-A, multi-branch national store. I don't think I'd really ever tip there. If I'm just going up to the kiosk and ordering, because sometimes they even have the kiosk where you can order yourself. I don't really tip there. If it's takeout from a local business that like I frequent and have a good relationship and stuff with, I'll usually give 10% if I'm just like picking up. But at a big national place, probably not.
So the average for both is actually 0.
It's 0 for both. Yeah.
So creditcards.com reports just over 10% of Americans say they always tip when picking up a to-go order.
Yeah.
So for the fast casual, Toast, which I think is like another one of those
Yeah.
POS systems, said the trend is increasing. Nearly half of purchases at fast food restaurants / coffee shops, which I feel like is like a key asterisk there,
Okay.
included
Yeah.
a tip during the fourth quarter of 2022 versus 11% pre-pandemic.
That's an important separation because I'll throw $1 at like Starbucks is the only place I can think of that'll prompt you.
Yes, because
And
they say
I'll
the
usually throw
average there is
$1.
10% for a
Okay.
barista.
Yeah. Okay. Because I'm like McDonald's, Chick-fil-A, Chipotle, like I can't remember ever being prompted to tip there, but yeah, it's a new world.
It is. It's very confusing. So I think the moral of the story is do what you feel is right and don't worry about it.
Yeah. Yeah.
So I love this uncorrelated story today, Sean.
This one's a doozy.
We
Strap in.
We only have one this week, so
yeah,
it'll be long.
It's a good one.
Taco Tuesday.
Do we have to be careful about saying Taco Tuesday? I guess we're not selling anything, so we're fine.
Yeah, it's just a story. Taco Tuesday is actually trademarked. That's what I learned.
Yeah. It's a valuable phrase, I'm sure.
Yes, and Taco Bell wants it. And so does LeBron James, apparently. So Taco Bell is owned by Yum Brands. Yum Brands owns Taco Bell, KFC, Pizza Hut. I think you looked up their revenue.
Yeah, they break it down weird because some of it's like franchisee, but for Taco Bell, their total, they call it system sales, which includes Taco Bell stores owned wholly by Taco Bell, and their franchisee revenue was like 14.6 billion roughly in 2022. If you strip out franchisee revenue, it drops a ton.
Looks like in their 10K, they said they spend 10K is a regulatory filing that publicly traded companies do annually. They said they spent 78 million on advertising in 2022. I feel like that's important to know for what we're about to talk about here. But this story was actually on NJ.com. It was picked up in a few other media outlets. I like the one that we have here because it spends more time talking about this person from the shore. It's like a short type story. So one of the people that owns the trademark, I guess the first person to trademark Taco Tuesday was his name, Gregory. Is that right?
Yes, not a typo. His full name is Gregory.
Just wanted to make sure. And he is the owner of family-owned Gregory's Restaurant and Bar in Somers Point, New Jersey. So you drive through Somers Point on your way to Ocean City. And he trademarked the term Taco Tuesday. I think it said 1978.
I think he said he started the process then, and then he finally got full rights in 1982. I think it was. So he's had it for 40 plus years at this point.
40 plus years. Yeah. So he owns Taco Tuesday in the state of New Jersey, the trademark for it. He used to own it in the whole United States, though, as the story goes, he forgot to renew some paperwork in the 80s. And there was another company called Taco John's that stepped in that was running a Taco Tuesday promotion, TWO Tuesday, that now uses Taco Tuesday, TUES, in the other 49 states. That's the agreement that they reached.
Yes.
But the thing about this is the guy doesn't even like tacos.
Yes. Gregory's not a fan of tacos. He talked about the first time he ate a taco. He bit into it and then spit it out and threw it away, but said, "This is going to be big. I need this in my restaurants."
I think it said the first time he saw or heard of a taco was he was working at a restaurant or owned a restaurant at the Gallery in Philadelphia, and there was a line of people waiting for him. So he decided to try this at the family restaurant down the shore. But Taco Bell wants this trademark.
Yes, TLDR, 2 guys own the Taco Tuesday trademarks throughout the U.S. Taco Bell is mad about it, and it's getting dicey.
So they filed a suit, I believe, saying that they believe Taco Tuesday is critical to everyone's Tuesday, and to deprive anyone of saying Taco Tuesday, be it Taco Bell or anyone who provides tacos to the world, is like depriving the world of sunshine itself. A bit over the top there.
Corporate lawyer speaks incredible.
Gregory's reply was, "It seems unfair to me. Taco Bell can have a trademark for the sound of the bell on their commercials, but they don't want us to keep our trademark for Taco Tuesday. Everyone rings a bell."
That's such an awesome comeback. It's an awesome comeback and great point. How can you trademark a sound but can't trademark words?
Yes,
A catchphrase, a slogan.
I agree.
I'm loving it. McDonald's trademark, like every company has one.
I'm in Gregory's camp here.
Absolutely 100%.
And you might ask the question, why doesn't he just sell the trademark? And in 2019, LeBron James wanted, or I think there was some like social media, right? He was
LeBron James went viral a couple Tuesdays in a row. He would do Taco Tuesday and he'd yell Taco Tuesday in like a funny voice and it went viral. And so, yeah, then in 2019, he tried to trademark it. They said, no, this guy, Gregory already has it. And what? Gregory tried to sell it to him, right? And
he said
LeBron never got back.
They were just unresponsive. His camp was unresponsive.
Yeah.
Yes, Taco Tuesday started at his restaurant in 1979. Although this was a nice part of the story. With Gregory's recent publicity, he's helping the community. He rolled back the clock to offer 3 tacos for $1 as part of a promotion to help the Summers Point Police Athletic League. And it says they raised more than $1,200 during that day. So I think is an interesting story.
Well, how about to get to the juicy part, I'd say Taco Bell is now running commercials calling on people to free Taco Tuesday, basically trying to create an army out of their customers to complain and make a stink on Twitter and stuff to get the trademark revoked for Taco Tuesday. And they have LeBron in on it. There's a commercial. I was watching game 1 of the NBA Finals on Friday. And if you haven't seen it, I'd look it up on YouTube. Just look up LeBron James Taco Bell commercial. And it's all about, let's get this trademark revoked. Incredibly hypocritical in my mind. LeBron tried to trademark it in 2019, was unsuccessful. Taco Bell wants it, doesn't want to pay up for it. So they're starting a smear campaign against this poor guy who did everything right, has a trademark that I would think is worth millions, if not tens of millions for Taco Bell. And Taco Bell, instead of paying up, is just trying to basically attack the guy.
Yes, Gregory says it is truly a David versus Goliath scenario.
I'm Team Gregory.
I agree with him, and he has enforced the trademark in the past. It said, he said usually you'll see people use Taco Tuesday, and they'll just reach out to him, and say, "Hey, you can't use this." He said they don't really want to litigate against anyone, and usually a call to the restaurants enough to get them to comply.
No, but I'm interested to see this plays out. I am happy to see too. In preparing for this, I rewatched the commercial on YouTube, and most of the comments were saying kind of hypocritical of LeBron after trying to trademark it himself. Now he's trying to bully this guy out of it. So I'm happy that's been the response so far. But
I agree. Taco Bell spent $78 million in advertising. Feels like they just, I don't know if they did this. Just feels like they must have done some scenario analysis and said, this is how much this trademark is worth. This is how much we may have to spend in legal fees or pressure campaign to try to get them to overturn it. If we're successful in challenging the trademark, it may cost a lot less than whatever Taco Tuesday may be worth if they were to just purchase it.
We'll see. We'll see how it plays out. I hope they can come to a deal and Gregory can get the value that he rightfully deserves out of Taco Tuesday.
Yes, sadly, if you're down the shore this summer, the restaurant in Summers Point will not be running Taco Tuesday promotions during the summer.
Well, that was a big thing around the .com time of people just buying up domain names too, right?
Oh yeah,
like people buying up slogans, domain names, and then trying to flip them. I would think everything's pretty tapped out at this point. So
probably, and props to Gregory's friend, the one who suggested that he trademarked that term.
Oh yeah,
and I believe it said he actually filled out the paperwork for him to get it done.
Owes a lot to that guy. So if you can figure out the next Taco Tuesday is going to be, slap a trademark on it.
Any parting thoughts?
No, all my mind's just so focused on tacos right now. I gotta get out of that Taco Tuesday conversation. How about you?
I mean, it feels appropriate. It is a Tuesday that we're recording.
It is a Tuesday, yeah.
Should go get tacos after this. All right. Until next week.